So today we are going to start a new topic, understanding of business cycles. Very important topic and very interesting topic as well, both in terms of macroeconomics and investment banking. So today we are going to start what do you mean and what is a business cycle? What are the phases of business cycle? Trough, expansion, peak, contraction, effects of business cycle. This is very important. And this is the practical application of understanding of the business cycle means what will be the impact of business cycle on monetary policy, businesses, GDP, consumer spending, business investments, employment, inflation, housing and real estate, and stock market. So this is how this is linked with this. So we need to understand what is a business cycle, what are the phases of business cycle, and how it is linked with these things, and how it will impact these outcomes. So these are the outcomes, right? And if these are the outcome, guys, it means it is going to impact our investments because we are the normal people of a country. We invest in real estate, we invest in stock market. It impacts our employment. So business cycle impacts the day-to-day things which impacts us as well, basically. So that is why understanding of business cycle plays a very important and a critical role. First, let's start the topic with what do you understand by a business cycle, right? So guys, let's compare the business cycle with a lifespan of a human being. When we take birth, we are a child, then comes adulthood, we become young, and then we move towards the old age. So these are the cycles. So energy levels keeps declining, our skin tone, health, everything keeps sometimes up, sometimes down. This is how the life cycle takes place. Same case happens in the business cycle, guys. Business cycle is a cycle of a business in an economy. So we can see business cycle in terms of an individual company and in terms of a macroeconomic level as well. We can see business cycle within a country or we can see business cycle throughout the world as well, right? So business cycle refers to natural fluctuation. That is why natural word was used over here because it is inevitable. It happens. It will happen. No one can stop it. The time we're going to discuss how it happens, but it is naturally, there is nothing like it won't happen. It will happen, depends how strong, how evident, and how deep it is. That will be decided automatically. And it is a natural phenomena basically. It is a natural fluctuation in the economic activity over time. Means it takes time, a lot of time. Means the way I took birth, I went to school, college, then masters, then job. It's a long time. So it's human cycle, life cycle. So business cycle is also a long time process. Consists of periods of expansions and contractions. Sometimes it expands, sometimes it contracts, right? Now, before I proceed further, let me tell you, we are talking about this cycle. So it will give you a better clarity, better imagination what we are talking about. So sometimes it goes down, sometimes it goes up. It is just like our life, guys. Sometimes moods are good, sometimes our mood is good, sometimes our moods are bad. There are mood swings. Like sometimes life hits you very badly, very hard. Sometimes life give you, a cake walk, easy walk, and good gifts as well. So it's just like life. So business cycles also sometimes goes down, sometimes goes up. So this is what we are discussing. So it reflects changing in the factors like production, employment, income, spending in an economy. So guys, we are talking about a macro event that happens in an economy. Guys, these are very, very important in macroeconomic level things. Even you are into investment banking or into economics, we need to understand how these macro level events impacts our investments, right? So there are few key phases in business cycle. Rough expansion. Within expansion, there's early expansion and late expansion, right? Then comes peak, then comes contraction. In contraction, guys, we're going to see it visually as well, but I'm just generally telling you, if contraction is deep, it becomes recession. If it is further, it goes down, it becomes depression, and if it is that it becomes further deeper, it becomes Great Depression. So it is the intensity of contraction that will decide what is recession, what is depression, and what is Great Depression. So it is the intensity of the business cycle that decides all these things. I hope this is clear to everybody. So business cycle it is a these are it includes these phases, sometimes expansion, sometimes down. It impacts businesses, it impacts investors, and it impacts all the stakeholders, right? It decreases the profits, it decreases the investment returns, so it impacts almost all the people or all the businesses throughout the world. So that is a business cycle is very important. Now, business cycles are correlated with monetary policies and credit cycles. We are going to discuss that in the coming slides. Business cycle could be outcome of monetary policy, or on contrary, monetary policy could be outcome of business cycle. Sometimes business cycle goes haywire, it goes out of control. So monetary policy are designed to control this business cycle. Sometimes business cycles are outcome of monetary policy. Sometimes we design monetary policy to control business cycle. First thing. Second thing, credit cycles are also linked with monetary policies, and credit cycles are also linked with business cycles. Means how much credit businessmen are getting from the banks. So that things are also linked, right? Now, phases of business cycle. Guys, just imagine yourself or you sitting in a roller coaster ride. It goes like this, then again up, then again down, again up, again down. Just take it as a roller coaster, guys. It goes down, right? Once it reaches down, it again, takes again collects the momentum and tries to get up. So it is going up now. Once it reaches the peak, so it again loses the momentum and just goes with the gravity downwards, right? And then again upward. So this is a roller coaster ride. And why I'm giving you an example of roller coaster, because we are going to discuss the impacts of this, huh? So over here, this example would be very important. Now, this is trough when the business cycle is going down. So this is trough. The lowest point is trough, right? After this, it starts moving upwards. So it moves towards recovery, right? So this picture I had used from CFA notes only, CFA, the official notes of CFA. So they had used recovery in trough. So don't get confused, guys, right? So they had used this word recovery instead of trough, but I would like to explain it in this way. Trough is the lowest part. Then it starts moving upward, and it start moving. Recovery starts coming in. So this recovery can be the word for this recovery can be used as early expansion as well. So in some books, it would be mentioned as early expansions. Then as it will keep going up, it will be late expansion because it's expanding, right? So late expansion. Now once it will reach at this top zenith point, this is called as peak. After this peak is achieved, it again starts going down. So it is called as slowdown. But when this slowdown further deepens, guys, this part, when this further deepens, it becomes contraction. And if this contraction is more deep, it becomes recession. If it becomes deeper, it becomes depression. And when it is deepest, it is depression, Great Depression. So it depends upon how much intensity, and how much depth it is going. So we will decide these terms accordingly. And at the lowest, again, it will be trough. So this is with time, guys. This is not happening in one day, 1 month. This is happening with time, years and years. And this upside down downsides, this is the economic activity or the GDP of a country, right? So we need to understand these business cycles are inevitable. They will come. Secondly, these business cycles, let's see few characteristics of these business cycles, guys. These business cycles are recurrent. Recurrent means it's not that trough and again trough. It will happen in this way only. These are recurrent. Trough, then expansion, then peak, then contraction, and then again trough. So it is recurrent. It is not periodic. This is very, very, very important, guys. Means it really does not matter that the length of these will be equal. Means if trough is for 1 year, peak will also be for 1 year, expansion will also for 1 year. It's not like that. It could be trough could be for 1 month or 6 months or 1 year. Then expansion could be for 10 years. Then peak again could be for 3 years, 4 years. Then again, contraction could be for 2 years. So the length, the time, it is not defined. It is not periodic. It can be long, it can be short. There is no hard and fast protocol that it should be of this number of years, it could be of this number of years. It could be of any length. So it is not periodic. I hope this is clear to everybody. It can vary in duration and intensity. Guys, this diagram is for the better understanding, but the trough can go deeper as well, and peaks can go higher as well. Peaks can be shorter as well, and troughs can also be shorter. So duration, intensity, it's no one can define it, right? I hope this is clear to everybody. Now, how we calculate one cycle. So one cycle is calculated from peak to peak, not trough to trough. It's an official rule how we will be calculating one cycle from one peak to the next peak. This entire thing is called as a cycle. I hope this is clear to everybody. Now, cycle is calculated from peak to peak. Now, let's give you an example of duration, intensity, and periodicity. The best example could be from 1854 to 2020. USA had witnessed 66 cycles. Just imagine. Those cycles could be short, long, but USA witnessed 66 cycles. Means from peak to peak, USA witnessed 66 cycles. So I hope you got the point. It is not periodic. The duration and the intensity could also be different. I hope this is clear to everybody. Now, recession. So we had many of us would be knowing this definition before itself that con that if the GDP falls for two consecutive quarters, we can consider it as a recession. But guys, recession is not one, it's not, it's a broad term basically. So in two consecutive quarters, if GDP is falling down, and along with GDP, other things are also falling down, at least more than one sector. It should be more than two or three sectors they are getting impacted. If only one sector is falling, it's not a recession. If it is more than two or three sectors, GDP is also falling, and other parameters, it is also very important. Other parameters are also aligning with it. Then you can say, yes, it's a recession. Otherwise, it's just a GDP and that too of one or two sectors, it may not be a recession because it is a broad term, guys. We can't just say that if GDP just fell down and rest, employment is good, inflation is good, everything is under control, then it would be a recession. No. We have to see the parameters. We have to see how many sectors it is impacting and how many quarters it impacted. So it's a broad term, guys. So recession is a broad term. Now, one more thing which I would like to tell you, these business cycles are basically for those countries where they follow laissez-faire. I hope you all know what is the meaning of laissez-faire. The countries who are capitalist, the countries where markets are free, markets regulate themselves. Market, demand and supply regulates the market. The best example could be USA. This is for the free countries, the capitalist countries, the countries where the government involvement is very, very less. Otherwise, government can control these things, right? But if the markets are free, laissez-faire is there. Only in those economies, in the business economies, the markets are free, capitalist economies, this is more evident. These business cycles are more evident in these economies. I hope this is clear to everybody. Now, I just want you to imagine this graph. Downwards, upwards, downwards. Trough is the lowest, peak is the highest. This is expansion, this is contraction. Now let's move towards the practical application of this. Now, after this is completed, we will be discussing this thing as well. We will be discussing, how the countries and in which position which countries are right now. So this will give us a better clarification, better understanding that what is the best time to buy a house, what is the best time to invest in companies, what is the best time to start a business as well. So it is that important. I hope this is clear to everybody. Now, for the better clarity, guys, I had mentioned it like this: trough, expansion, peak, contraction. And for the better clarity, I had using pen, I had drawn this thing over here itself so that you can better imagine it, visualize it, right? Now, business activity, business activity. So we'll start from expansion and peak first, right? So it is going upwards, downwards, upwards, downwards. Just take it as a roller coaster, guys, right? So once the roller coaster is at the bottom, it starts picking up, right? So once it hits the bottom, it starts going up. So business activity in the trough, that is the bottom of the business cycle, it starts picking up. It starts moving upwards, right? So there is a big thrust, small thrust that comes in. Then it moves upwards. It starts going expansion phase. So it is accelerated, means then it moves, right? So it moves upwards then with a quite a good pace, huh? Then once it reaches the peak, when this roller coaster reaches the peak, right, it starts declining. So when it hits the peak roller coaster, the growth starts declining, guys. And when it starts moving downwards, contraction, it starts decreasing. Now, I hope you can imagine it with a roller coaster. You just have to imagine it with that, because otherwise students do get confused with this. We, in what would happen, right? Now, interest rates. Now, next is consumer spending. Now, before this consumer spending, we'll see what is happening with this business spending and employment. See, guys, if GDP picks up, something opposite happens to the business. Now, let's see how it works. Now, business is what exactly is happening in businesses means business gives people jobs, people earn money, and then they spend, right? So it's a cycle. It goes like this. So more businesses will flourish, more people will get job, more money they will earn, and more spending they'll do. I hope this is clear to everybody. Now, over here, what would happen? Now, business spendings means what businesses will do in plant, property, equipment. So once it is at the bottom, once the roller coaster is at the bottom, it hit the bottom, that is tough, right? Businesses are very scared. They don't know, when it will come back. So what they will do, they will not invest in new factories, they will not buy new property, they will not buy new plants, not buy new machineries as well. So businesses will use best utilize whatever they were having. Because the thing is that there was a bad impression of let's give you one more example over here, guys. The best example to the young people over here would be breakups. Once you have a bad breakup, that memory stays for the next phase of life. Trough. So trough, before trough, what is the phase? It is contraction. So after contraction, troughs comes, right? So over here, if I relate it, how in contraction, businesses are not spending because there is bad time for businesses. So when it hits the rock bottom, so they are still afraid. They have bad memories of contraction. So they don't buy new machineries, new plants. So they use the present equipments, present machineries at best as possible. So they don't do any investments. Once things starts becoming better, it starts moving upwards. The positivity in the businesses, it increases, right? So they start increasing the investments and they start buying new plants, new factories, new properties, new equipments, new machineries. It also increases. And once it hits the peak, guys, now again, it's a contrary thing. Once it is on the peak, guys, businesses, they exploit funds like nothing. They use a lot of money once it is free, easy to get. So that's why I was telling rates. We will be reading rates as well. So over when peak hits, the businesses are at their high. They don't stop spending. They take more and more loans. Over here, they start taking loans. Once the expansions takes place, they start taking more and more loans. Again, in the peak, they continue taking more and more loans. And once the contraction hits, then it starts decreasing again. Now, let me repeat myself again. This was what that happened during COVID crisis. During COVID crisis, we were in this phase. Businesses were getting huge investments, foreign FIIs, angel investors, new startups were taking place. And all of a sudden there was a dip. All of a sudden, all these things they declined, guys, right? So businesses, they start their expansion investments only in expansion and the peak phase. The rest they don't do it because they businesses are very pragmatic guys in terms of utilization of funds. They will see what is going to happen, and because as I told you that these cycles no one can predict, it's very difficult to predict actually. So that is why business becomes so suspicious whether to take loans or not, whether to buy more machinery or not. I hope this is clear. Now how would it impact the employment? So once it is at the rock bottom, right? So as I told you, businesses will maximize the use of the machinery, the productivity. So they will increase the productivity of the labor. They will not hire new people because we are at the rock bottom right now. They are very suspicious what is going to happen in future. So new hiring is not taking place, but they will not also lay off people. But they will use these people maximum as possible. Means they will increase the productivity over time. Means one person will do the job of two people. It's just like that. So I hope this is clear. So it's not employment will decrease, employment will become constant. No more layoffs will take place, but whatever people, whatever resources the businesses will have, businesses will use those at maximum efficiency, highest efficiency, right? Now, once the expansion takes place, the employment increases. This is very obvious because now businesses also start investing more money. New startups will start flourishing, so they will provide more employment. Or employment opposite, it will decrease. I hope this is clear. Once the peak hits, guys, once the peak will hit, the hiring will slow. Means yet there is no layoffs are taking place, just hiring slows down. Means whatever people already being hired, no new people will be hired anymore. So hiring will slow down. And what will happen in the contraction? Employment will decrease and people will be laid off. People laying off will start in the companies. So unemployment will increase. I hope this is clear to everybody. Just imagine peak and troughs are two main things. And in expansion and contraction, it's very easy. Expansion, everything will increase. In contraction, everything will decrease. Very simple to understand. Expansion, everything will increase in accelerated pace. Contraction, everything will decrease. In trough and in peak. In trough, things will start picking up slowly, but start picking up. There is very small evidence that things will start picking up and people will become bit positive. That's it. In peak, things will start moving down. Bit slowly, but they will start moving down, just like a roller coaster. Once it hits the peak, it starts moving down. And trough, once a roller coaster hits the bottom, it starts picking some pace towards upward. So just imagine this thing, guys, to remember this, right? So whatever, see what this table, guys, I had prepared this table from four different chapters. So four different chapters are compiled in just one table. So I want you to understand it better. I hope this is clear to everybody. Now, consumer spending, again, very important. It is dependent upon employment, basically, how much you are earning. So consumer spending starts picking up a bit, starts picking up because what happens, you know, the people become more positive, laying off had stopped, right? And the people who are working, basically, they are earning, they start picking up because there is a hope that is coming in that expansion will take place. So consumer, this will start picking up. There's one more reason behind this why it will start picking up because guys at this time it is linked with rates as well. We are going to touch that and we are going to come back again to the previous table. So it will start picking up, especially the durable goods like fridge, washing machine, the tangible items. It will start picking up. So once it will start picking up, so it will push a demand in business. Because of this demand, expansion will come. See, guys, these are linked with each other. So once the durable, because the manufacturing sector is the only sector which has the probability and the capability of providing jobs to many people. In service sector provide jobs to only people who are skilled, who have that competence. But manufacturing, even a person who is not having knowledge, who is not educated, he can also get job. So this consumer spending will thrust a demand, will push a demand, and this will motivate these businesses. That is why we are moving towards expansion, guys. So it picks up. Expansion phase, I told you, it will everything will increase. So consumer demand will increase. On contrary, in contraction, everything will decrease. There will be decrease. Now, once we hit the peak, so demand is high, but it starts slowing down a bit. So once you hit the peak, guys, the demand will start going down. I hope this is clear to everybody. Now just imagine this thing with a roller coaster ride. That is the best example I can give to you. I hope this is clear to everybody. Now let's move to the next slide. Now inflation rates, exports and imports. Now exports and imports are also very important and they play a very important role. They change according to business cycles of domestic business cycle and international business cycles as well. Real estate, inflation and inflation rates. So before we proceed further, let's see the rates first. Very, very important. These are monetary policy rates, guys. So once we are at the lowest, for example, right, we are having expansionary policy. Now let's see how it works. Let's relate it with inflation. When we are at down, right, employments were not that high, it were low, right? So inflation was going down, right? So it means if inflation is down, on contrary, it means demand is also less, right? Now, once we start moving upwards, the inflation increases, right? So inflation will increase because people are getting jobs, more salary, more money supply, more demand. So if demand will increase, inflation will also increase. Once it hits the peak, the inflation will be very, very high. This thing is contrarian, guys. Just keep remember this. That is why I had, highlighted it in white color. And once it hits the peak, it will not start coming down. It will further keep rising. In peak, inflation will keep rising, guys. Just remember this thing. This is very important. In the previous slide as well, there was one contrary statement. Businesses will keep taking more and more funds even once they hit the peak. They will not come down, right? So they will keep further, the inflation will keep rising further and further. It's only the contraction when it will come, it will start going down. I hope this is clear to everyone. Why in the contraction it will go down? Because the businesses will start shutting down. People will start losing jobs. Money supply will decrease because no salaries. So demand will also decrease. So the inflation will go down. Now, how it is linked with rates? This is very, very important, guys. Once the inflation was low, right? Uh, Inflation is low, less demand, less companies, less industries, less manufacturing, less production, and less employment. It is not advisable, right? Then RBI will do expansionary policy. It will decrease the rates so that expansion comes as fast as possible. It is very, very important, guys. We are trying to make monetary policy just parallel to the business cycle. Once we are hitting the trough, guys, the RBI or the central bank of the country will try to decrease the rates so that more and more businesses they start taking loan. And if they start taking loan, it will increase employment. More and more people like you and me, we start taking loan. If we take loan, we'll buy washing machines, fridges, and demand will increase. So, so that this expansion comes fast as early as possible, RBI or the central bank will decrease the rates. And because the rates will decrease, it is expansionary policy. And because of this, we will proceed to the next phase, that is expansion. As early this is done, better it is for the economy. Once the expansion will hit the expansion, it will tend to rise the rates. We will, because what would happen if we keep giving money free of cost, at very low interest rates, businesses, people will keep buying the products, but demand will further keep increasing and increasing, and that will increase the inflation, guys, right? So Even inflation is also increasing. Now, to control this inflation, we are decreasing the rates as well. It is going parallelly. I hope this is clear to everybody. I told you in peak inflation is highest. And at this point, guys, the monetary policy will become hawkish, tight, and the rates will be increased to control this. If we don't control it here, it will be very difficult for central bank or RBI to control this inflation again. I hope this is clear to everybody. Now the rates will be very, very high, and this rate will again bring down this inflation and then expansionary drop again. I hope this is clear to everybody. We had done this, we had discussed this thing in the monetary policy videos as well. I want you to go through those videos. It will really clear your concepts. We had discussed monetary policy in the most practical way, right? Now, since now rates are linked with real estate as well. Why we are studying real estate over here? Why not other sectors? Guys, real estate is the only sector that is impacted the most by the business cycles. Why? If business cycle is at the bottom, people will not buy houses. People will not buy homes. If people are not buying homes, construction will decrease. Construction of the houses. So if construction will decrease, cement factory, paint factory, crude oil factory, employment of laborers, all these will be impacted. So real estate sector is a good parameter of judging how the industry, how the economy of the country is going on. I hope this is clear, and that is why real estate is very important in business cycles. We need to understand this thing. Now, once the rates are low, so, for example, earlier you were getting home loan at 14%. If I say today you are getting at 10%, you will buy a house. Immediately you will buy a house. So rates were low. So real estate rates were low. They attracted more buyers and more people purchased the houses. So once they started purchasing the houses, the demand of the houses increased. And with demand, right? Cement factory employed more people. Cement factories production increased. Paint factory, crude oil. So much factories are linked with it. And with this, engineers, laborers, you can say transportation vehicles, automobile sector, employment will generate. So many things will get increased. But because of high demand, again, real estate prices will go up because it is increasing inflation and interest rates will again start rising so that it should be brought down. And after this, when it tends to rise, it becomes very high at peak. At peak, in the rates of monetary policy are the highest, guys, right? To bring down the inflation rates and to bring down the real estate rates as well. And it declines over here. Now, again, to understand it in a very easy way, in expansion, everything will increase. In contraction, everything will decrease. And in trough and in peak, generally, things will start either picking up or decreasing. Just few exceptions. Exception is inflation and exception is the business spending. Rest, things are very, very normal. I hope this is clear to everybody. Now, exports and imports. This is something we need to understand from the concepts of how exports and imports are impacted over here from business cycle. For this, I need to show you some another slide, guys. This is a slide. I want to ask you a question. What would happen to imports or exports if rupee becomes stronger or the value of rupee appreciates? What would happen? What would happen if the value of dollar or dollar becomes stronger? What would happen to imports and exports? And how can we learn this concept over here? Means how business cycles are impacting imports and exports over here. Can anyone tell me? Okay, this is a recorded session. So the thing is that I want you to think and let me know. Now, I want you to first think what would happen if dollar becomes stronger and what would happen if rupee becomes stronger. Two different statements. Think, pause, and then come back. Now, two things, guys. Take this world, take this entire world, take this entire. I'm so sorry, there was some noise in the background. Take this entire world as a market. Now, if rupee will become stronger, domestic rupee will become stronger, we will tend to buy more stuff from outside. So always remember, if domestic rupee, domestic currency becomes stronger, imports increases. So it will increase the imports. On contrary, when the external world currency means dollar becomes stronger, they will buy more stuff from us, right? So our exports will increase. Let me repeat myself again. If domestic currency becomes strong, right? Currency within the country becomes strong, we will import more. So it will increase the imports. On contrary, when the external world currency becomes stronger, it will increase our exports. So we have to keep two things in our mind. The world is a market and we are part of this world. If we become stronger, we buy more. If they become stronger, they buy more. So if today you might have heard that dollar is becoming stronger day by day, so it will impact that they will buy more stuff from us. And if rupee becomes stronger, we will buy more. So I hope this is clear to everybody. Now, coming back to this and how it is linked to a business cycle. Let me relate it over here. Guys, it is very important that if we are having expansion in the world, the countries should also face the expansion. If we are facing, you can say, peak in the world, countries should also face the peak, because in expansion and peak, the purchasing power of the world would be higher, right? At the on contrary, if the cycles of domestic and the world goes opposite, it will become very difficult for international trade. Means world is having expansion, we are having contraction. World is having contraction, we are having expansion. It will become very difficult for international trading. For international trade, it is very important that the cycle overlaps each other, domestic cycle and the international cycle. So that is why business cycles are related. So if it is in expansion phase or peak phase, it will make the dollar strong. So they will export, they will buy more, so our exports will increase. I hope this is you're getting the point. So business cycles impact domestic markets as well as international markets. And how you will be remembering this thing? The value of rupee, if increases, it will increase the imports. If external value of the currency increases like dollar or any other currency, they will buy more from us. So it will increase our exports because we are selling to them. I hope this is clear to everybody. Okay. Now coming back to imports and exports. The same thing, guys, same thing it will happen over here that when there is trough, right? Exports will improve and imports will be low. Whenever there is expansion, right? Exports will increase and imports will decline, right? Now, exports will fall in the peak and imports will be high. So this is how it will work. And in the contraction, guys, exports will improve, currency depreciates, and imports will decrease. Now, how it works, guys? If the currency will depreciate, as I told you, so imports will decrease, right? And external currency is becoming more powerful, they will improve. So this will happen in trough. I hope this is clear to everybody. And on contrary, opposite will happen over here. Guys, I hope this is clear to everyone. Now, coming to how we can apply all this knowledge in stock market now. How stock market would work over here. Now, guys, what would happen over here is that whenever the markets are low, at their lowest, people are not having jobs. People, if they are not having jobs, they don't have money to buy things. So if they don't have the money to buy, the optimism in the people will decrease that everything is bad, nothing is going to improve, and demand will also decrease. So in trough, stock indices also bottoms out, means they also hits and they also goes down. So we have to see where in the country, which phase of business cycle the country is at that point of time. I hope you're getting the point. So once it is at the bottom, so this stock indices also goes down. Now coming to expansion. Now expansion brings new hope, new sentiment, and new emotional, you can say, boost in the people's mood. So they start getting new jobs, new salaries. So new salary mean new demand. So demand will increase, and in expansion it will start moving upward. Bullish, it will become bullish. I hope this is clear to everybody. Now, in peak, what would happen? It will be at the highest because I told you businesses are taking more and more loans. People are having good jobs. They're earning more money, right? So they will keep investing. So it will become volatile. It will become overvalued over here. Means it will become like a bubble, guys, which may burst in future because people are earning a lot of money. They are investing a lot of money, and it is making bringing a lot of demand, and that demand is going to increase. It's going to make stock market really volatile. So this is not the point to invest in the market. The best point to put money is when the expansion phase is just starting. I could have said trough, but trough you don't know how deep it could be. But as the expansion starts, you should start investing in the market. But once it hits the peak, it's not advisable to invest in indices basically. And in contraction, I told you things will start going down. Means expansion, and in contraction, very simple to understand. Whenever expansion will take place, it will increase. In contraction, things will start going down. I hope this is clear to everybody. Now, I will show you a small picture, and I want you to just see what is happening over here, guys. So these are the phases, right? These are the name of the countries. This is live of data for quarter 4 2024. So this is this year basically. So these are the countries. So I want you to pause the video and I want you to see what is happening over here and which country is lying at which place and why do you think this is happening? I want you to think. Now let's see, guys. India, Mexico, Brazil, we are the growing countries, right? We are over here, guys. Doing good as such means growth peaking, credit growth is strong, profit growth and policy is neutral, inventory sales grow. Things are going normal in India as such. As such, things are going normal. USA, fine. Japan, it's moving downwards in late contraction, if I tell you, right? So growth is moderating, credit is tightening now, right? And policy is contractionary policy. We had already discussed thing. Now, guys, why we are discussing this thing? Because I want you to apply the knowledge in current affairs in practical life, how it is applicable over here, right? So these are the countries, Australia, Japan, these are the countries in late phase. Now, there are few countries who are hitting, recession part as well. If recession, why the term recession is used? Because that more than 2 or 3 sectors have hit badly. Second, it's more than 2 quarters they are going downwards. So you might have heard in news as well. Canada is not doing good. In the condition of Canada, euro is also going to hit. Europe is also going to hit this very soon. So condition in these countries are is really jobs are declining. Credits have declined. Policy, the interest rates, they're trying to decrease the interest rates, but it's not helping the people. Means China, on contrary, it's rising up. It has moved the trough and it is moving. It is moving towards the expansion phase again. So guys, see, this is something which is practically applicable. You can see over here. Now, if I would have asked you, is it the right time to invest in India right now? India is a growing country, right? So thing is that these are the countries which are peaking, which the growth is at the highest right now. And guys, it is not something like this that we are going that it is not something like that we can predict that when the next trough is going to happen. I told you that these cycles are unpredictable. There is no periodicity in these cycles, but it's just recurrent. The thing is that in India, what could happen? We can rebounce from here. We can go up to very, we can go down from here. We can touch the trough and we can stay there for many years, or we can rebound very easily. So that thing no one can predict. But the thing is that if I tell you, if we would have invested in India, if India would have been here, that would have been a good option because Indian stock market have grown a lot for last 10 to 20 years. So before few years, India was here, guys. So it was a growth story for India. But guys, again, it's not something like that. India is going to touch and go here up to here. We can rebound fast because we are the highest populated country. So we have good amount of demand. So demand is not an issue in our country. India never hits recession. The only reason, if I ask you, can India hit recession? So recession could not be a right word for India. Recession means when there is very, very low demand. But in India, we are 150 crore people. The demand never goes out of fashion or never go very, very low. In countries like America, Europe, European countries, the population is so low that their demand almost gets vanishes. So it becomes very difficult for the country to rebound that demand. But in India, that is not a concern to us. So that is why India never hits the recession or never hits depression like stages. Now, I would like to give homework to you as well, guys. So I want you to do research. I want you to do case studies on the Great Depression on 1930s, 1929, right? Why it happened, how it happened, which country it happened, why it led to World War, or World War One was the reason for it. I want you to go through it. And I want you to see how fast it rebounded, how many years it took place, right? If I tell you a positive thing, a ray of hope, if I give you, guys, these downfalls, these troughs and these slowdowns, they have less time period. Means max to max, it will stay for 2 or 3 years or 5 years. But you can see peaks and expansion can stay up to 20, 30 years as well. So this phase is longer as such. And this phase has short time. So there's not like that recession if hits in a country, it stays for a long period of time. When recession hits in a country, it stays for 1 or 2 years. After that, it rebounds very, very fast. So the positive thing is that the upside have more time duration, time span, and the downsides have the declining sides have less time duration. That is a good thing, basically. So I want you to research this thing only. That what was Great Depression? Same thing happened, guys, during 2008 crisis. Now my question is, but I want you to do the research that how long this recession, this financial crisis of 2008 took place, how many years, and after how many years it immediately rebounded back. So always remember one thing, the downsides have very less time span. Similarly, for post-COVID crisis, everything was fine before COVID, guys. Once the COVID had hit, what exactly happened? The markets fell down. But don't you think COVID was just 2020 and 2021? From 2021's market started rebound. So it was just again a one year event, basically. This is what I wanted to say. The downfalls are for very short duration and the upsides are for long duration. Now, if I summarize myself, the best time for the investments is this phase. Try to find out in which phase which country is right now and try to invest. Whenever India will be hitting it again, try to invest. This is one of the way of investments. Now, three things I would like to conclude with: business cycle, monetary policy, as well as credit cycle. They are very much linked with each other. If the monetary policy is liberal, people will get credits easily, people will get loans easily, and that will also impact business cycles easily. So if markets are going up, monetary policy is in the favor, credit cycle is also in the favor, it will keep going up. Means if all three are overlapping each other, so they make each other stronger, right? And if they are downwards and monetary policy is opposite direction, the downward thrust, downward trough and contraction will also be very less. Means if they are overlapping, it will make this business cycle strong. If they are opposite, it will make business cycle weak. But if all becomes aligned, right? So it can make business cycle more strong, guys. So trough can become deeper, contraction can be longer. I hope this is clear to everybody. So that is why business cycle, monetary policy, and credit cycles, they are linked with each other. I hope.